Well, it's time for mid-cap IT earnings. In fact, Mindtree as well as Cyient have reported their Q2 earnings, and both have reported a strong beat in terms of margins, which has aided the profitability. Firstly, just in terms of Mindtree, well, Mindtree revenue growth is in line, higher than expected. Profits are led by good amount of margin expansion there. Mindtree reported a 2.1% revenue growth in constant currency terms. This is on a sequential basis. Dollar revenues grew 3.1% quarter on quarter to $261 million. In fact, the EBIT margin has expanded 150 bips quarter on quarter. Some of the analysts were expecting EBIT margin expansion to be around 120 odd bips. As a result, we're seeing a strong profitability growth of 19.1% on a sequential basis to 254 crore. TCV of deal wins has come slightly lower at $303 million versus the $391 million in the previous quarter. And we're also seeing that the attrition, in fact, has come lower for Mindtree at 13.8% versus the 16.6% in the previous quarter. Management at the earnings call has mentioned that they're seeing that most of the client spends is shifting to digital customer experience, cloud, and many clients want to invest in digital and want to reimagine their business model, and hence they're seeing good amount of deal momentum there. They also mentioned that despite Q3 being a seasonally weak quarter, they're fairly confident of maintaining the growth momentum. They also mentioned that in terms of the various verticals, for instance, for travel, transport, logistics vertical, they are seeing green shoots there. However, it is too early to call out for all-out recovery in the TTH vertical, and it will possibly take several quarters for the travel, transport, logistics vertical to in fact recover. Utilization has improved, and they are better and reaping benefits of operational efficiencies, and that has led to better margin performance. Also, better treasury management has aided the margins along with cross-currency benefits. Dependency on H1B is not as much as the company is doing a lot of local hiring in US. To know that they get substantial amount of their revenues from US, and the company, the management seems to be comfortable so far, at least on the H1B issue. Speaking about Cyient, well, I would say it's a very strong beat in terms of margins for Cyient. EBIT margin has expanded 586 bips on a sequential basis. Revenue growth has been at 1.3% quarter on quarter in constant currency terms. Dollar revenue has grown 3.5% quarter on quarter to $135 million. Profitability has been at 84 crore versus 81 crore in the previous quarter. If we look at the services revenue, that has been down 0.4% QOQ, but the design-led manufacturing revenue is up substantially at 11% quarter on quarter. Management has also shared the outlook across the verticals. If we look at the outlook, aerospace and defense, wherein they saw a degrowth of 10.4% on a quarter-on-quarter basis. This vertical, the outlook there is fairly uncertain according to the management, and Q3 does see a cyclical decline in the aerospace vertical. But barring the aerospace vertical, the management, the Cyient has in fact reported growth across communication, transportation, medical, healthcare, as well as the portfolio unit as design-led manufacturing unit. It's been a strong performance coming in, especially in the transportation unit, which has grown 21% QOQ. Medical healthcare unit has grown at 49% QOQ, and design-led manufacturing segment has grown at 13.3% QOQ. Management outlook is slightly soft, especially on the aerospace defense vertical as well as the semiconductor vertical. Both these segments have reported a degrowth during this quarter, but management outlook is fairly positive, especially in terms of the medical healthcare vertical, and they are stating that they have witnessed strong performance along with an addition of a top client, and they are expecting a strong positive growth in the communication vertical. Energy vertical is showing traction. They expect a positive growth in the portfolio vertical, and they expect a very strong growth coming in the DLM, which is the design-led manufacturing vertical. So all in all, I would say the management commentary across most of the verticals is fairly positive, barring aerospace and barring a semiconductor vertical. Service margin were fairly high, growing at 542 bips quarter on quarter, and this was led by better operational metrics, lower restructuring and one-time cost, and also we saw volume impact and lower spend on SG&A. If you look at Cyient as well, they have announced an acquisition of IT Partners, and this is going to enable Cyient's digital capabilities in the energy and mining industry. So all in all, fairly good numbers coming in from both Cyient as well as Mindtree on their, especially on their margin